Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. We're going to rip through Twitter, see what people are sharing on social media today. I'll interject my financial opinions as we go, and it's generally related to three different topics: wealth building, finance, or commodities. I think the opportunities are all interlinked there. Finance gives you the market conditions. The wealth building is how you build wealth, and commodities are what's undervalued today. So those are the things that I'm focusing on almost entirely because of the opportunities in the market. The opportunities shift from commodities to stocks, commodities, and it goes back and forth, swinging back and forth. Right now, I think that we're at the end of a stock bull market, and I think that we're at the beginning of a commodity bull market. So that's my opinion, big picture view, 30,000 foot view of kind of how I view things. So that's why I'm going over a lot of bottoming patterns in a lot of these commodities and precious metals. So let's dive in there. Let's see what people are talking about. And if you want to follow me, it's at finance. And if you want to join our community, finding-value.com, I do lots of training sessions there for the community. We do question and answer sessions on the weekend, midweek updates where you can see what I'm buying, my portfolio. You can see the pricing that I'm getting. You can see the chart setups, and there's a lot that you can learn and incorporate if you are trying to put together a portfolio. I talk about position sizing. I talk about the setups in certain sectors. I do talk about individual companies, but it's up to you on how you want to invest it. I cannot give advice. I'm just telling you guys information of what's out there. So coming on down, we've got silver here. This is the cup update from Sahara. So this is this person's opinions on it, and mine are going to be very similar to this person's opinions. So let's just go over it real quick. In technical analysis, the we look for patterns, and it's basically recognizable patterns that the herd creates over time. This is called, you get the lead in from the bottom up, and then you get it's a continuation pattern, a cup and a handle. Really what this is there's resistance at certain areas that you hit. It's a psychological threshold, basically at 40 or 50 bucks, that we hit this resistance area, hit it again over here, and then we're hitting another resistance area underneath this downtrend line. We haven't broken out yet, and a lot of this deals with the psychology of the herd. The herd likes to chase shiny objects. So when things start to move, the herd starts to move at it. They chase price. Right now, we're underneath that resistance level. People are pretty much bored with silver, and they don't believe that it's going to move higher. But the pattern suggests that we've got a long way to go on up. So I think what he's done is he's done basically a Fibonacci extension on a lot of this. He's taken this extension move here, put it on top. That is a $43-ish price target. Then you can go on up. I'm sure he did a cup and handle on the normal, which probably puts you at the top here around $138. Depending on certain ways that you look at it, it could be another Fibonacci extension up to 300, and maybe even a long Fibonacci extension all the way to $666 for silver. How do we get to those prices? What is the world going to look like? It's not about how we necessarily get there. It's more about the setup that is occurring right now. The money is in the system, and none of that money is really located or parked in precious metals or in commodities. So it's all pushed over in stocks. It's all chasing Nvidia, and Nvidia is a 2.33 trillion market cap company. I just looked at it. 2.3 something trillion market cap. That money, when they have a 60%, 70% decline, that money has to go somewhere else. And it's going to chase price performance. It's chasing price performance of NVIDIA today, but it's going to chase something like silver or gold or some commodities or uranium or whatever it is in the future. And we just have to wait for that money rotation to come to us. and all the FOMO people, the fear of missing out people, come and chase back into this stock. The money is already in the system. It's you just don't see it. It's all tied up in tech stocks. That's where the bubble is. And when that bubble unwinds, it'll create a bubble in gold and silver and other commodities. That's how I view it. Robert Friedland says predictable. Amid explosive demand, America is running out of power. I've talked about this on our website. I did an entire presentation on the natural gas setup. And this is vast swaths of the United States are at risk of running short of power as electricity hungry data centers and clean technology factories proliferate around the country, leaving utilities and regulators grasping for credible plans to expand the nation's creaking power grid. And basically, if we come down here, the soaring demand is touching off a scramble to try to squeeze more juice out of an aging power grid while pushing commercial customers to go to extraordinary lengths to lock down energy sources, such as building their own power plants. The quote is, when you look at the numbers, it is staggering. That's the chairman of Georgia Public Service Commission, which regulates electricity. It makes you scratch your head and wonder how we ended up in this situation. How were the projections that far off? This has created a challenge like we've never seen before. So there could be rolling blackouts and stuff like that that is coming across the nation because of such an increased demand for electricity. And I know you uranium bulls, I get it. We need nuclear. In the short term, I think natural gas will be the gigantic winner here. In the long term, I think natural gas and uranium are both very big winners. We have to go nuclear. The problem is, I don't know if we can ramp nuclear that fast. Right now, the biggest market share gainer of all of this has been natural gas. It's been displacing a lot of the coal power plants. They run the renewable power to the natural gas power hub. They distribute it, they convert it from, I think, DC to AC, and then the swing producers, the natural gas power plant. So natural gas, I think, is going to be the big winner in the short term. Long term, definitely nuclear. We gotta ramp it like no other. Totally agree. Here's Uranium Insider. Let's go to this thread real quick. He says, "Great you per yonder, however you say his name. A Swiss uranium trader has been in the business for 20 years. Said everyone 2007 to where we are right now. This is not 2007. This is 1970 when the birth of nuclear energy. And when you had a decade long bull market because of all the ramp ups and demand increase, that's the kind of demand increase we're seeing now. It's a completely different setup. This is a multi decade development story. And I wanted to tie that with the article I just read about electricity and how there's basically a problem with the grid and on top of it, all of the generating capacity we need to have for the insatiable growing demand for electricity. This uranium story isn't even like the 1970s, in my opinion. In the 1970s, it was viewed as a growth industry, which it is today. That's the parallel. But what's different is we had a lot of inventory of uranium back in the 1970s. Today, it's bone dry, baby. This is such a great setup for a long term hold in some of these developers that can develop these mines. The only negative thing that I can say about the companies is none of them are cash flowing really at this time. That's the only negative I can say about it. But the setup is there, guys. Huge market setup for that. Lawrence says, want to understand why sound money assets are hitting record highs? Here is the clue. It's the US monetary base and it's starting to increase again. We saw a massive increase for the COVID stimulus, and we probably have to do something here with increasing, I don't know what it is, stimulus, QE, maybe something to do with our bond market, but it is increasing. US natural gas output is down 7% as producers cut back amid price collapse. And we've had a price collapse in natural gas, not from power burn demand, but from weather. It's been incredibly warm, and weather has a huge impact on the demand for natural gas. Goldman Trader back in 2000, everyone thought the internet would run on Cisco routers at 50% margins until they didn't. And what he has over here is the overlay of Cisco, which is the red, and then the price overlaid is NVIDIA. And everybody thinks that NVIDIA's chips are going to be the thing that's going to run the world, and well, it doesn't. I mean, that's really what it is. JC says every time it gets up here, the line goes down. So this is the US dollar divided by the Japanese yen. To me, it looks like it's topping out. We've pulled back here recently, and maybe we can pull back this way. And what that means is that the dollar will get weaker, potentially against the Japanese yen. And that will have an impact on the pricing of commodities in dollars because other currencies are going to become stronger against the dollar. I also think that the dollar will weaken to save our bond market. So it's a combination of a couple of things that are leading to a weaker dollar. Here's Grady. He says, most are still doubting gold's move here. And that is why GDX and SILJ are not having 8 to 10% days yet. The largest percentage gains are always from the very lows. Profit is made when you buy. So we're at a very low level for GDX versus GLD, the ratio. We've got a downtrend line break here, and we've come all the way down, basically almost to a double bottom. So the larger gold miners versus gold, we have the smaller ones that are obviously delayed behind this that are still at excellent buying opportunities, in my opinion. After today, we had a minus 40 billion cubic feet EIA withdrawal. Nat gas inventories remain at 5-year highs, now more than 300 billion cubic feet above last year's second highest and 800 billion cubic feet above the 2022's 5-year minimum. So we do have a lot of natural gas in our inventory at this time. So here's gold. Hinster says, $8,000 is my price target, undervalued. We've broken out of the box here, the breakout. What I look for now is what's silver going to do? What's platinum going to do? And he's got a big move. He's got a move, if it's the same move as the 1999 to basically the peak of 2011, we could see a move of 672% in gold. And maybe we're very close to like the 2002 era. If you were to compare it, where the dollar goes down, gold breaks, we get a little bit of weaker yields, oil goes up, all the commodities go up with it. So Gary, let's read Gary's real quick. He says, almost everyone is still shell-shocked and stuck in recency bias from the declining phase of the last intermediate cycle. They can't make the adjustment to a completely different environment than they've gotten used to for the last 3 years. The same thing happened at the start of the baby bull in early of 2016. He's talking about precious metals. The longer traders remain in denial, the more chasers there will be, and the longer and farther the rally will go. The most successful traders are the ones who can recognize when the environment changes and adapt quickly. Those people are few and far between. It's why almost no one can buy bottoms. It's why almost no one can sell tops. And it's why almost everyone just sits on their hands for weeks and even months before accepting that something has changed and then pulling the trigger to take advantage of the opportunity. As I've said dozens, if not hundreds of times, I'm not interested in chasing a rally that is mature and stretched far above the long-term moving averages. I want to find something that is just beginning a big move. That's what we did, and we are now getting rewarded huge for our patience and discipline. And that's exactly what I do. I try to size up the big moves. I try to get in early. And I still think that we are very early in gold and silver mining companies. I think that we're early, even still, in oil and some of these other commodities. There's a long way to run. So I agree with Gary wholeheartedly. And there's very few people that can do that. And I've spent my entire investing my entire life trying to figure out how to buy bottoms, how to psychologically move away from the herd, how I can implement the three pillars. I needed the three pillars to do it. I needed technical analysis, I needed ratios, and I needed the financial market conditions. I needed all three of those to buy bottoms. Here's the DXY. Can you de-dollarization? He's got basically an inverted or a triple head and shoulders top. Sorry, head and shoulders top potentially, maybe. This commodities bull market is the greatest opportunity in your lifetime. And with gold breaking out now, this chart is now turning on lower time frames. Fortunes will be made. We have all been at his service. But here is First Majestic Silver versus Nvidia. You can see this is a false breakout, most likely. It's a squeeze up with a huge false breakdown. And what happens with false breakdowns, guys? They go into a slingshot cheetah, is what I call it. It slingshots down and then it flings back up, maybe even some dramatic amount. So the question is, do you want to chase price that's going in the opposite direction higher, or do you want to chase trying to buy a bottom here and being patient for this to turn and roll on up? The potential move of chasing something, you might get 100% your return. The return here could be 10, 20, 30x, depending on, he's got 108,000%, which is a 100 bagger, well over a 100 bagger. But we'll see. We'll see what occurs there. This here is also going to be a combination of NVIDIA going down and First Majestic going up. We have a breakout here. There you go. Copper futures are breaking out in the overnight session. Expect green shoots in some of these companies that he's got listed. Yeah, we've got a breakout here, boys. What we're looking for. And there's a lot of opportunities for investment in copper in a lot of these big diversified mining companies. Steel is going to be another huge, huge, huge play because we got to build out our grid. And they use steel structures and aluminum and all sorts of stuff. And those are also setting up for big moves, which we are taking advantage of on the website. We have usually made our best purchases when apprehension about some macro event were at a peak, so a lot of fear. Uncertainty is actually the friend of a buyer of long-term values, says Warren Buffett. And I'm getting really good at this. That is where I'm really tripling down on is becoming better and better at this exact, I'll call it skill set. AMD Advanced Micro Devices price to earnings graph compared to the peers. Cisco was at 196. AMD is at almost 400. It's probably nothing. The largest gold funds continue to face daily redemptions as gold is at all-time highs. Number one reason for the redemptions, we'd rather own Bitcoin. Very bullish for gold and gold equities as gold breaks up and into new highs. And it's almost like a silent breakout compared to Bitcoin and some of these other areas. In order to be successful, an investor has to understand not just finance, accounting, and economics, but also psychology. Totally agree. Here's a couple of breakouts here. We'll just go straight to it. Silver is just starting to peak above the breakout line. That's what I've been watching. We'll get a full breakout at about 30 if you use a yearly close. If we can close above 30 this year, we will have a yearly close and be breaking out. So we also have gold that's already broken out. So breaking out, breakout for gold on the gold quarterly chart, and then we're almost doing that in silver. I'm watching silver. This is going to be a big breakout, I think, for silver, and then I'd also watch platinum too. Wealth Coach says, want to become financially free? Pick a high income skill, earn as much as possible, invest 25 cents of every dollar you make, stick with it. The path is simple, but simple isn't always easy. It is that simple, guys. And do not get into debt. Avoid debt. A majority of life's errors are caused by forgetting what one is really trying to do. What is your goal? Take the least amount of risk to get to your goal. What I do. We've got total U.S. Oil inventory. There are 48 million barrels less than 1 year ago. And here we are at all-time lows, at least over this period. And we continue to draw down oil inventory. Continue to draw it down. It's going to be good for, obviously, oil prices. If you're wondering why palladium is bouncing, so palladium priced in gold, he's got the strong wall of support resistance going all the way back to the 1980s. We have a big move up. We have a big move down and a consolidation. We'll probably have a consolidation here in palladium. The big one that's probably going to benefit is going to be, since palladium has fallen and rhodium has fallen, we still are having deficits in platinum, but they're pulling back production on all of the PGM metals at this time. So I think platinum will be one that really rips to the upside at some point. It's also the cheapest on a ratio perspective. Junior silver miners are about to double their share price in less than 3 months. The bigger breakout will follow closely behind maybe a 10x. Nice little support zone there. We're getting a bullish candlestick forming right now, and potential downtrend break to the upside. Totally agree there. Silver's looking pretty good. The rich invest in time, the poor invest in money. Just to let you guys know, that's Warren Buffett. And that's what we've got for today. So give me a thumbs up for the content, subscribe to the channel, subscribe to the website if you like. LEAP is the discount coupon code if you'd like to use it. We'll catch you on Sunday at 5 p.m. Mountain Time. If you want to ask me questions directly, we do have a training going at the beginning of that question and answer session. I know some people really wanted this, and I really want to share what my viewpoints are on the setup and the data that backs it. So that's what I've got. We'll catch you next time. This is Finding Value.